This episode is brought to you by Netflix. This Monday night, witness the end of an era. John Cena takes center stage for his final appearance ever on Monday Night Raw. One last match, one unforgettable farewell. Come celebrate the legacy of a true WWE legend. Monday Night Raw, November 17th at 8 p.m. Eastern Time, 5 p.m. Pacific Time, only on Netflix. Be there for the moment everyone will be talking about.
Hey friends, this is Audie Cornish, host of CNN This Morning and The Assignment, and guess what? Every story you care about, every angle you want unpacked is now streaming on CNN. That means you can catch my show or other CNN programming whenever you want on your favorite device. And a subscription also gets you access to exclusive video series and unlimited articles. So subscribe to CNN at cnn.com/subscription.
Welcome to Farm Your Daily, a Field Forward podcast. I'm your host, David Geiger. Today on Farm Your Daily, a big U.S. Department of Agriculture report is set for release tomorrow. So what are the thoughts in the marketplace as they head into the report? Reese Drenth with the Ground Level Dispatch joins us to go over expectations. Please be sure to like and follow the podcast as well as our social media at Field Forward Pod. We would love to have you join our community, keeping folks informed about what is affecting our farmers. This is Farm Your Daily. And joining us on Farm Your Daily, we're going to take a look at the marketplace with Reese Drenth of the Ground Level Dispatch. Reese, thanks so much for joining us again on Farm Your Daily. And let's take a look at what we've been seeing soybean demand-wise. We had some announcements of potential trade deals with China. It's had some initial buys, but, you know, it's been a bit more volatile since then. We've seen some movements and some trade expectations change a bit over the last couple weeks. What are you seeing as you look at the soybean market?
Yeah, thanks for having us. Always good to chat with you. Soybeans have been very, very interesting to us. Just taking a step back, kind of like you mentioned, obviously a couple weeks ago, we had a big powwow in South Korea between our two presidents of China and the U.S. A trade agreement, framework agreement was struck. Then you had U.S. Trade representatives like the Secretary of the Treasury go on TV and say, hey, China's going to buy this many soybeans. The market went crazy, and we really haven't moved off those marks ever since. You know, soybeans have kind of leveled out here about $1.20, $1.30 higher than what they were before all that commotion happened, which is a good thing. But like since then, the Chinese have bought a little bit of U.S. beans. It's important to note that their government entities are the ones that bought their beans, which the government entities are not necessarily as price sensitive as like their private companies in China that are trying to make a buck versus, you know, getting subsidized by the government. So we've seen some soybean purchases there. And then since then, the price of beans in Brazil has gone down drastically, right? So making us less competitive. The buying has kind of dried up, and from exporters that we talk to, you know, we've kind of had a few swings and misses. As far as we've offered plenty of business out there, but we haven't really been taken up on it. And we've seen kind of actually China buy some more Brazilian beans for in the calendar year 2026 instead of buying our beans. So that's kind of where we sit here today. And it's, you know, again, the reason why I use the word interesting is it's pretty interesting that soybean markets have not really reacted in a very negative way, even though the Chinese haven't really done anything for a couple weeks. So, I mean, we've seen soybeans be quite resilient from a price perspective, being as like nothing's really changed except they bought a few boats of beans. So as far as our expectations, you know, again, the bogey here for calendar year 2025, which is, you know, quickly coming to an end here, whether we like it or not, is roughly 400 million bushels. We haven't even scratched that, and we're running out of time. So, you know, does Ground Level Dispatch, does Reese Drenth think that the Chinese are going to buy 400 million bushels of soybeans in this calendar year? No, I don't. I mean, it's way too late, and Brazilian beans are too cheap, and they don't necessarily need them at the moment. Now, does the market, at least, is the market holding on to hope that they buy something? I would say yes. I mean, we've got flat price beans that have kind of topped out on, close to the 2025 highs, which is a great thing. And, from our perspective, we've been writing about it. We've been talking about it with our farmers. I should probably sell some beans here at this point. The market's been, I think the pushback to that has been like, oh, China isn't buying and we've been resilient. So this thing doesn't really feel like it can go down, Reese. Isn't it just going up? And like, I understand that sentiment, but when the market gives you $1.25 gift for really nothing except for a bunch of headlines, you should probably take some risk off the table and reward the market. So that's kind of our thoughts on soybeans here. And it could change with China coming screaming in and buying a bunch of beans, but that's not really how they roll. And B, man, I don't know, just like reality would say that that's not really going to happen.
I was going to mention that because soybeans have breached at least halfway through this week that $11 mark, and we really don't have too many exports of our soybeans for this year. So we got a lot of beans stocked up, and it's getting closer to Brazilians' selling time. Where are those beans going to go if China doesn't buy them?
It's a good question. I mean, a lot of those beans will probably, what'll happen is the market will probably go into bigger carries than what you see now, and those beans will find their way into storage. And when the market needs them, the market will pull them out of storage to crush them. And when they don't need them again, they'll, basis will go work lower, spreads will get wider, and they'll go back into storage. I mean, if the Chinese don't come in and buy their 300 or 400 million bushel worth of beans, and yields don't change drastically, in which we really don't think they're going to change drastically from the 53, they might go down a bushel or two, but not 5 bushel. You're left with a soybean carryout of 500-600 million bushel instead of 200 or 300 million bushel, and that, that's a kind of a bearish bean carryout number. So, it's kind of the status quo. If China doesn't come in and buy beans, it's kind of the status quo of what we saw a couple months ago. Big bean carries, prices, under $10 cash, and kind of reassess the situation. I will say too, as farmers are making seed decisions here, either now or coming up soon, I think a lot of feedback to what we've heard is like, hey, we get another 50, 60 cents out of this bean market. Like, we might go ahead and plant more beans. They're cheaper to put in the ground. There's some money in there. There's some money to be had there, some margin to be had at decent bean yields. So, there's a lot riding on next year's carry out too with what the Chinese do here in the next 30, 40 days. So interesting times.
Interesting times. And we have spoken before on Farm Your Daily about USDA reports and the government shutdown having a couple skipped reports, so the market's kind of running off of private data and estimates. So we are set to get a USDA report at the end of this week. What are traders expecting for that, and how are you looking at that report?
Yeah, so the trade estimates are kind of in line with expectations, maybe a little bit off the bean yield and 2 bushel off the corn yield from 186 down to like 184. And we kind of expect that. We think there's reason to believe, very good reason to believe, that corn yields are not 186 in this country. But we just don't know if the USDA is going to print a number that's drastically lower here in November. There's plenty of questions about USDA reports when the government is in full force. The government really hasn't been in full force in a couple months and still not back to work. Is the information, even accurate? So we don't expect much of a report either way, bullish or bearish. I think if a surprise came on this report, I will say on corn, it would probably come to the downside on yield, as in like that would be bullish. If USDA is going to shock the world here, they go from 186 back in September to 176 this month. You know what I mean? It's like a surprise would probably be bullish. But if, we only get the market expectations of 186 down to 184 on corn yield, then you're still working with a carry-out number, which is all that matters, that ending stocks carry-out number, whatever you want to call it, at or above 2 billion bushel, which is not really a bullish number for corn either. And I think that's why you've seen, from a chart perspective on corn futures, you keep stopping out at the 200-day moving average. We've written about that quite a bit too. Like, we're getting a lot of chart resistance, technical resistance, at the 200-day moving average on corn, which on these futures is like 435, 436 area. We haven't been able to get past it, but we're sitting right underneath it. And I think that's the argument why we don't break through, is because, the carry out, even with a yield reduction of 2-3 bushel the acre, which historically is big, that it still leaves us with ending stocks that are too big. So, trade estimates, again, expect small yield reductions. We expect small yield reductions. We actually like making some corn sales, while basis bids have improved. If you're going to core bins in November, or, looking at December bids, or when you want to core bids or whatever, we recommend, making small sales here on corn too before this report, because if we don't get what we want and yields don't change, or yields go down slightly, kind of like the market expects, that could be a pretty wet blanket on what on the marketplace on Friday, and that could really do some damage to the charts too if we haven't broken through that 200-day moving average as well. So we are risk managers at heart here at Ground Level Dispatch, and we like rewarding the market on beans and taking some risks off the table on corn before the report, just in case we don't like what we see. Caveat, again, if USDA is going to shock the world in any means, they take yields lower, right? There's really zero room to take them higher.
Reese Drenth is with the Ground Level Dispatch. You guys send out daily emails, twice a day actually, and in the description of the podcast, we are going to have a link where folks can try out a month free. What would folks get if they clicked on that link and they got signed up for your emails?
Yeah, great question. We send out market information on commodity markets twice a day, sometimes once a day, depending on traveling, but mostly twice a day. And then we write weekly editorials. This past weekend, on Sunday, we did an input editorial. We like to put out fertilizer market information every Friday too, just to keep our readers in tune with the fertilizer markets and input markets and stuff like that. And then we write about things like USDA report on weekends and crazy stuff. We even did one on like John Deere stock prices and financials a few months ago too. So just want to try and on the weekdays keep things short and sweet, to the point, be respectful of everybody's time, touch on the stuff that matters. Then the weekends give maybe folks some time to digest some of our other thoughts. So give us a try out. Love to have you.
Reese Drenth with the Ground Level Dispatch. Thanks so much for joining us on Farm Your Daily.
You bet.
This is Farm Your Daily, and we are going to take a deep dive into what the markets looked like headed into the report session. And at the close for Thursday, December corn 6 1/4 cents higher at 441.5. March corn 6 1/4 more, 455.5. Soybeans in January 13 1/4 more at 11.47, with March rising 12 3/4 cents at 11.56 3/4. Soybean meal in December $7.40 a ton in the green, $328.40. Soybean oil, however, seeing a slight decrease, 1/3 penny weaker at $50.25 a pound. December wheat, 1/4 penny down, 5.35 3/4, with March wheat 1/4 penny weaker as well, 5.52 1/4. Hard red winter wheat in December 1/4 cent up at 5.25 3/4, with March hard red winter wheat up 1 penny 1/4, 5.43. Looking over into the livestock market close for Thursday, it was very negative there across the sector. December live cattle down $6.27 a hundredweight, $219 even, with February down $6.02 at $218.95. Feeder cattle in November $2.02 a hundredweight down at $337 even, with January a decrease of $9.02 at $318.45 a hundredweight. Lean hogs in December $2.55 a hundredweight down, $78.07, with February falling $2.67 at $78.85 a hundredweight. That is the Thursday market close. This is Farm Here Daily, a field forward podcast. Thank you so much for listening. Again, in order to continue to produce this type of local content, we would love to have you join our community. So please follow the podcast as well as our social media channels at Field Forward Pod. You can also find me on social media at Geiger Reports. Again, I am your host, David Geiger, and I'll be back again tomorrow, everybody.